What's going on, everybody? Welcome back to another YouTube video. In today's video, I'm going to be doing a trade recap of a trade that I took on the 9th of September. This trade actually resulted in a break-even result. So let's get right into it and show you how I actually took this trade, how I managed my position. So the first thing that I always want to see is a buy side or a sell side liquidity level getting swept. And in this scenario, we did get a sell side liquidity level get swept at 23,741.5. But prior to that, we also did get London lows and Asia lows swept, but we did actually not get a setup that actually follows our rules and our plan in order to go for a long. So I waited, and in the second A macro from 10:45 to 11:15, we do get this setup right here that I will be going through right now. So after sweeping that sell side liquidity level, and obviously prior to that, we swept London lows and Asia lows, the second thing I want to see is a swing high being created. And the reason why I want to see a swing high being created is because step number 3 and 4 are related to that swing high and are dependent on that swing high. So we do get a swing high right here at 1040 that is created. As well as that, we also do get this 1040 on ES on the right hand side. The third thing that I'm looking for is a market structure shift, and the fourth thing is a displacement. And we do definitely get this market structure shift and displacement to the upside, not only on NQ but also on ES. So this just emphasizes that this is more of a higher probability trade, but we do not get a fair value gap on NQ, whereas we do get the fair value gap on ES right here, as you can see, that formed at 1045. So because we didn't get that fair value gap on NQ, there was no entry point for me, as we all know that the fair value gap is our entry point. As soon as price retraces into that fair value gap, we execute the trade. But since there is no fair value gap in this instance, I could have not entered this trade. So what I did, I waited for another swing high to be created, and as we could see right here, we do get this swing high on NQ at 1049, and we also get this swing high on ES at 1048, both of which are valid. We also do get a market structure shift and a displacement to the upside on NQ and ES. And just to run back through what a market structure shift and a displacement is essentially this swing high right here is at 1049. A market structure shift is pretty much a large strong candle that closes, as you can see, above this swing high right here. That is just essentially a market structure shift. And the displacement, as we can see right here, is a large strong closed candle above this swing high. So they're both pretty much very similar, but have a little bit of a different meaning. So we do get this market structure shift and displacement on both NQ and ES. So both assets are correlating, and definitely we do get a fair value gap on NQ this time, so as we do get the same fair value gap on ES as well. So it's very important to actually see what price is doing on NQ and ES. They're going to have very similar price action. So as soon as we get this fair value gap, the next thing I'm looking for and waiting for is a retracement into this fair value gap to go long. But as I always say, we have to enter and execute as soon as price retraces into the edge of this fair value gap right here. In this scenario, if I did execute as price retraces into the edge of the fair value gap, I wanted to have my stop loss always below a swing low, as that's our rule and that's the game plan. I would actually be risking 34 handles, which is more than the allowed risk per trade, which is 30 handles. So in this scenario, I just drop my entry point where it will only cover 30 handles for that stop loss to be placed below the swing low. But in any other situation, if we do have a swing low that is going to be covered by 30 handles, I do not want to put my entry point about the constant encroachment of the fair value gap just to get a better entry price, or below here to even get a better entry price. You would always want to execute as soon as price retraces into the edge. But again, as I said, and I mentioned earlier, that in this trade, in order to risk 30 handles and have my stop loss below this swing low right here, would have to have my entry just below the edge of the fair value gap right here. So what I'm targeting, I'm going to be targeting this swing high right here as my take profit 1, and this swing high right here as my final take profit. And I also do want to take 80% of my trade position off at TP1. That's just for low hanging fruit. And if you also do want to have a runner or two, you could leave it up to that final take profit point. But it's very important to take at least 80% of your profit at that take profit 1, just to secure a good amount of profits, and to have 1 or 2 runners running towards that swing high is absolutely fine. So the reason why this was actually a break-even trade, even though if I did leave my stop loss here, we would have ran for final TP and our profit would have been hit, as you can see right here. But it's very important to follow rules, and the way I followed my rules actually got me to get stopped out in this scenario. But that does not matter. The reason being is because most of the time price would actually not do this, come down here and then continue up. It will come down here as soon as it took this swing low and this also swing low right here, as you can see at 1132, which it broke. It will most likely, most of the time, come down and then drop to your stop loss, obviously, and keep on going down. But it is very rare in this scenario that price will come down, take all these swing lows, and then pull up to the take profit. So I was reducing risk. So what I did was I saw this swing high right here at 11.09 that got broken by this candle right here at 10.12. So we broke another swing high once we're in the trade. What do I do now is I want to reduce my risk to this nearest swing low after we broke this swing high right here with this candle. And the reason why is because if price is always going to be algorithmic. Price is algorithmic. So if price does want to come down and take this swing low and this swing low out, then most likely it's going to come down and take this swing low as well. And it's just going to keep on dumping down, right? Because again, price is just very algorithmic. So I know that if price comes and sweeps this, then it's going to eventually also sweep this swing low where my initial stop loss was. So why not reduce my risk now, just in case? It shouldn't come back down. And if it does, well, that's what price wants to do. So after I see that swing high get taken by this candle, I reduce my risk. And again, another swing high at 10.12, and then again it gets taken. As we can see, this candle closes above the swing high. What do? I reduce my risk again to the next nearest swing low, which is in this case this one right here. Now there's a lot of swing highs here getting stacked up, but if you look very closely on the right hand side here, we do see that ES actually took out these swing highs and we broke above it at 11.25. So what do? I move my stops now to break even, and now I'm not expecting this swing low to get broken. If it does, it will continue going to the downside. So as you can see right here, price actually does come down, doesn't take this swing low out at 11.07, obviously not this swing low at 10.50, and it rallies straight up to our take profit 1 and also our take profit 2. But I do want to say something, guys, that not always price is going to do that. This was just a very low chance of price doing that. Usually when price comes, takes a swing high, breaks above, it keeps on going up, and it shouldn't take this swing low. It shouldn't take a swing low, then continue to go to the upside. It should just keep on going. It should create higher lows and higher highs in order for price to continue to the take profit targets. And that's why I do reduce my stop loss, because price is algorithmic. If it wants to keep on going up, what's going to happen is it should create higher lows and higher highs. And that's why I do reduce my stop loss and I do reduce my risk. As I said just before, it does follow an algorithm, which if it is seeking, for example, lower prices, it's going to create lower lows and lower highs, and vice versa. If it's going up to the upside, it's going to create higher highs and higher lows. That is why I reduce my risk. And there you have it, guys, the ICT silver bullet model. Unfortunately, we did get break even on this trade, but that is all good. There's plenty of trades in the future to catch and capitalize on. I want to say thank you guys for watching, tuning in. If you guys do have any questions, make sure to drop them down in the comments down below, and I'll be sure to get to them within the next 24 hours or less. Also, guys, the VIP top trading floor server is up and running. The link will be in the description down below. I'm offering a massive discount right now, a 50% off the yearly plan. If you guys do join right now, it's going to be limited time only. The promo code will be again in the description down below. Now, I do offer live trade signals, and not only that, I do go through the trades with you guys each and every day, just so I could absolutely teach you guys what to do, what not to do. I explain why I take steps that I take, and I do answer you guys' question every single day if you guys do have any. So in the Discord server, you'll find heaps of support from me and guidance to your profitability. Again, thank you guys for watching. Hope you had a great one. Peace.